Welcome to the Crop Insurance Podcast, the podcast where we dive deep into the world of crop insurance. I'm your host, Mike Rydell, a third-generation crop insurance agent, and I'm thrilled to have you join me on this educational journey. At our family-owned and operated business, we've been providing crop insurance expertise for generations. Our goal here is simple, to educate our listeners. Crop insurance can be complex and overwhelming, but I believe that understanding it is crucial for every farmer. So whether you're a seasoned farmer looking to stay updated or a newcomer seeking guidance, this podcast is for you. Well, hello there. In today's episode, we're going to be talking about the projected price and the harvest price in relation to your crop insurance policy. And again, like all these podcasts, make sure you've checked out the episodes prior to it so you have a better understanding of how this knowledge builds to give you a more comprehensive understanding of how your policy works. So the projected price and the harvest price come from the CEPP. And the CEPP is the Commodity Exchange Price Provisions. So the Commodity Exchange Price Provisions are part of the crop provisions in your policy. These provisions outline the methods and how you determine the projected and harvest price depending on which crops you're talking about. Some of the crops that utilize this portion of the policy are barley, canola rapeseed, corn, cotton, grain sorghum, rice, soybeans, sunflowers, and wheat. Understanding the projected price and the harvest price is crucial to understanding your crop policy. So be sure to check out our blog article that discusses this, as we have some links to the county actuarials, some links to the actual Commodity Exchange Price Provisions website on RMA's website to give you a deeper dive into what we're talking about. For the purposes of this podcast, we're going to be using wheat in Cascade County in Montana to help illustrate these principles. So the projected price is used to help establish your baseline of your coverage, whether you're in yield protection or revenue protection. There are some differences in the way it utilizes this price and when you apply the calculation, and we'll discuss that in later episodes. But for now, you just need to understand that the projected price represents the average daily settlement price of the pre-harvest year, specifically during the projected price discovery period. And that is different for each crop, and each crop will utilize different markets, obviously different crops and different time frames to come up with that projected price. So this is applied at the beginning of the crop insurance period. Just know that when you do see the dates for the discovery period for the projected price, it usually takes 3 days for them to release that price. Some of the crop insurance websites do show these little calculators where we're showing the average during the entire discovery period, which is roughly 30 days. There are some separate little rules and regulations if there's holidays or if the markets are closed, and it deals with all of that in the CEPP. We don't need to dive that deep into it. Just know that that 30-day discovery period, they're going to take that average. And so you can kind of follow it along while you're preparing to decide what to do for your next crop insurance year, because that projected price is going to help establish your baseline of coverage. And so you're going to have an idea of what your coverage per acre is going to be on your guarantees. So it is important to follow that projected price discovery period as you're preparing to make your decision prior to sales closing for your specific crop. Harvest price, depending on which crop you're looking at, it's going to have a different harvest price discovery period, different markets, different crops, etc. This is usually taking place at the end of the insurance period, closer to harvest. This is why it's known as the harvest price. Now, if you're in yield protection, you won't pay attention to the harvest price. If you're in revenue protection, you certainly will. And again, we'll discuss that in a later podcast and article on our website. But just know that the harvest price behaves similar in that it uses that 30-day window, although it is a different time period. It uses that average to come up with the price. A quick example for those listening, if you go to our link to our website, you'll see this little table we have in our article, but it shows you that for wheat in Montana, There's winter wheat and spring wheat are the two examples we used. So winter wheat uses the Kansas City Board of Trade. It's contracting hard red winter wheat. The contract month is September. Now, the projected price, the discovery period is from August 15th to September 15th. So in winter wheat in Montana, sales closing is September 30th. So about 15 days from the time you need to make your decision on what coverage level, options, etc. for the next year, you're going to find out the projected price. So that's why you should be following it all along, starting in usually the end of August, first part of September, so you have time to make that decision. The harvest price for winter wheat is the month of August. Now, when you look at spring wheat, the harvest price is actually the same time frame, the month of August, but instead of using hard red winter wheat, it's looking at hard red spring wheat, which makes sense. The contract month is also September, but it's using the Minneapolis Grain Exchange instead of the Kansas City Board of Trade. Different markets, different crops, same time period, but it's a different crop, spring wheat versus winter wheat. Now, the projected price for spring wheat is actually the month of February. So again, you've already signed up in Montana by September 30th for your wheat coverage, but your projected price for winter wheat, you'll know in September, but you won't know the projected price for the next growing season for your spring wheat until later on in the year in February, because spring sales closing is March 15th. One little thing that's interesting about wheat in Montana is that for all purposes, wheat is wheat. Once you sign up in September, you're locked in on your coverage for winter and spring wheat. So you really need to pay attention to what's going on with winter wheat in September. So at the end of the day, the important thing to understand about your projected price and your harvest price is when those price discovery periods are, and paying attention to those so you can understand what your coverage is going to look like for the next year. And you can also kind of get an understanding on what your loss scenario might look like. Because if you're in the revenue protection program and that price is going down, that's going to let you know that you may have a loss triggered due to a decline in price. And don't worry if you don't understand that fully, as we will touch on that in a later episode. But that's why you need to understand what the projected price is and what the harvest price is. From my family to yours, thank you very much for listening. I sincerely hope that this presentation has been instrumental in enhancing your understanding of federal crop insurance. If you find value in our podcast, we kindly encourage you to subscribe and spread the word among your friends and neighbors. To access further information, please visit our website at thecropinsurancepodcast.com, where you'll find the latest podcast episodes, articles, and exciting new features conveniently located in one place. This information is not all-inclusive and is meant to be used only as general guidelines for educational purposes. For additional information, please see crop provisions, reference the Crop Insurance Handbook or Loss Adjustment Manual, or contact your crop insurance agent. This institution is an equal opportunity provider and employer.